On July 6, 2018, the U.S. slapped an extra 25% tariff on $34 billion worth of Chinese goods, firing the first shot in the U.S. China trade war. Nearly 6 years later, not only has U.S. China trade undergone major changes, but the buzz about economic decoupling between China and the West is louder than ever. With the reshuffling of global supply chains, China's status as the world's factory is being shaken, and the global trade dynamics are shifting significantly. Starting last year, Mexico dethroned China as the U.S.'s biggest source of imports, a title China held for 17 years. The data shows that last year, the U.S. imported $427.2 billion worth of goods from China, a 20% drop year on year. Meanwhile, U.S. imports from other parts of the world have been on the rise, causing China's market share in the U.S. to shrink. According to U.S. statistics, in 2023, the share of imports from China was just 13%, dropping to levels not seen since 2003. Let's look at the data from China's National Bureau of Statistics on foreign trade. From January to May 2024, the total U.S.-China trade amounted to $263.5 billion, down 1.4% year on year. Exports to the U.S. were $195.9 billion, up 0.2%, while imports from the U.S. were $67.6 billion, down 5.8%. Even though China's exports to the U.S. grew slightly, it wasn't enough to offset the drop in imports from the U.S., leading to a continued decline in total trade. This indicates that U.S.-China goods trade is still on a downward trajectory. With the strategic competition between the U.S. and China deepening in the economic field, the remaining 7 months of 2024 aren't looking too promising for U.S.-China trade. What's even more alarming is that as Western developed economies accelerate their decoupling from China and the US pushes forward with economic integration with Europe and Japan, the global economic landscape is being rewritten. One clear sign of this is that the US is starting to replace China as the largest exporter to some developed economies. Let's take a look at Japan. According to Nikkei, in 2023, Japan's exports to the U.S. are rising, while exports to the stagnant Chinese economy are noticeably sluggish. For the first time in 4 years, the U.S. surpassed China to become Japan's biggest export destination in 2023. Japan's Ministry of Finance trade statistics for 2023 show that Japan's exports to the U.S. total about $138 billion, up 11% year on year. In contrast, exports to China from Japan were about $121.1 billion, down 6.5% from 2022. Entering 2024, Japan's exports to the U.S. are still climbing, while exports to China are dropping. According to data from China's General Administration of Customs, from January to May 2024, the total trade volume between China and Japan was $23.9 billion, a year-on-year decrease of 5.2%. Exports to Japan were $61.5 billion, down 7.7% year on year, and imports from Japan were $62.3 billion, down 2.5% year on year. Back in 2004, the total trade volume with China, including Hong Kong, surpassed that with the US for the first time, making China Japan's largest trading partner. Currently, trade with China accounts for about 20% of Japan's total foreign trade. Japan has long enjoyed a trade surplus with China. This shift indicates a growing trend of economic decoupling between Japan and China, while strategic cooperation between the US and Japan is rapidly advancing. Now let's take a look at South Korea. According to Yonhap News Agency on June 10th, from January to May 2024, South Korea's exports to the U.S. reached $53.3 billion, surpassing exports to China, which were $52.7 billion. That's a difference of $610 million. South Korea's exports to the U.S. have seen year-on-year growth for 10 consecutive months, with a growth rate of 15.6%, primarily driven by exports of automobiles, chips, and computers. According to an April report by the Bank of Korea, South Korea's largest corporations had already surpassed their exports to China with exports to the U.S. back in 2023. Thanks to steady U.S. consumer demand and increased South Korean investment in the U.S., South Korean exports to the U.S. are expected to continue expanding. If this trend continues, the U.S. could become South Korea's largest export destination for the first time in 22 years, the last time being in 2002. In fact, South Korean exports to the U.S. have been steadily increasing in recent years. In 2020, South Korean exports to the U.S. were $74.1 billion, which rose to $95.9 billion in 2021, $109.8 billion in 2022, and continued to soar to $115.7 billion in 2023, hitting a historic high. The U.S. has once again become South Korea's second largest export market after an 18-year gap. Meanwhile, South Korea's trade with China took a nosedive in 2023, with exports to China dropping to $124.8 billion, only $9.1 billion less than those with the U.S., marking the lowest level in 19 years. According to Chinese data, the total trade volume between China and South Korea in 2023 decreased by 13.5% year-on-year, with exports to South Korea down 7.2% and imports from South Korea down 18.7%. In 2003, South Korea's exports to China surpassed those to the U.S. for the first time, and the total trade volume with China also exceeded that with the U.S., making China South Korea's largest trading partner. Currently, South Korea's trade dependence on China is between 1/4 and 1/5. South Korea has long enjoyed a trade surplus with China, but now, under geopolitical pressure, South Korea finds itself having to choose between China and the U.S. The next trade partner is instead in Europe. Germany. It's a major European economy. According to Reuters, from January to March 2024, the total trade volume between Germany and the U.S. reached about $68 billion, while the trade volume with China was slightly less than $64 billion. This marks the first time this year that the U.S. has surpassed China to become Germany's largest trading partner. The main reason is the sharp decline in German imports from China, which fell by 11.7% compared to the same period last year, to $39 billion. German exports to China also dropped by 1.1% to $26 billion. According to Chinese data, from January to May 2024, the total trade volume between China and Germany dropped by 8% year-on-year, with exports to Germany falling by 2.9% and imports from Germany plummeting by 12.9%. In 2016, China surpassed the U.S. to become Germany's largest trading partner, holding that position for 8 consecutive years. For 49 years, Germany has been China's largest trading partner in Europe. However, Germany has faced a massive trade deficit with China for many years. Analysts believe the current changes in Sino-German trade are a result of the German federal government's effort to mitigate risks and diversify. Under the guidance of Green Party Economy Minister Robert Habeck and Foreign Minister Annalena Baerbock, German companies have reduced imports from China and increased imports from Southeast Asia and other regions. Meanwhile, the decreased consumption in China has also reduced imports of relatively expensive German goods. In contrast, Germany's exports to the U.S. are on the rise. Currently, the U.S. accounts for about 10% of Germany's goods exports, while China's share has dropped below 6%. This shift reflects a significant economic transformation, indicating that Germany is adjusting its geo-economic strategy, pivoting from China as a systemic rival to the transatlantic partnership with the U.S. Back in East Asia, let's look at Taiwan. According to Taiwan government statistics, in the first quarter of 2024, Taiwan's exports to the U.S. reached $24.6 billion, while exports to mainland China were only $22.4 billion. This is the first time since comparable data became available in 2016 that the U.S. has surpassed China as Taiwan's largest export destination. From January to April 2024, data from Taiwan's Ministry of Finance shows that Taiwan's exports to mainland China, including Hong Kong, decreased by 3.7% year-on-year to $45.3 billion, accounting for 30.7% of total exports, hitting a record low since 2002. The Taiwan Strait has long been a hub of close economic trade due to the shared language and close proximity between mainland China and Taiwan. For years, mainland China has been the top investment destination for Taiwanese businesses. In 2003, Taiwan's trade volume with mainland China reached $10.9 billion in exports and $35.3 billion in imports, both hitting historical highs, with China surpassing the U.S. and Japan to become Taiwan's largest trading partner. Since then, Taiwan's trade dependence on China has continued to rise, peaking at over 40%. Taiwan has long enjoyed a significant trade surplus with China. However, the situation is changing. According to Taiwan's Ministry of Economic Affairs, in 2023, Taiwan's export dependence on mainland China dropped to 35%. Taiwanese investment in mainland China plummeted by over 40% year-on-year, falling to $3 billion, the lowest in 20 years. Simultaneously, Taiwanese investment in the U.S. soared ninefold last year, reaching $9.6 billion. Analysts suggest that with Lai Ching-te winning the election in early 2024, the CCP's increasing economic, political, and military pressure on Taiwan is accelerating the decline of China's economic grip on Taiwan. Meanwhile, U.S. support for Taiwan is growing stronger. Besides enhancing military sales and aid to Taiwan, the U.S. is also frequently engaging with Taiwan on economic and trade issues. Last year, the U.S. and Taiwan signed the first phase of the U.S.-Taiwan Initiative on 21st Century Trade, which has the nature of a free trade agreement, and they are currently negotiating the next phase. According to the Associated Press, Taiwan's exports of semiconductors, electronic components, and computer equipment to the U.S. have tripled since 2018, reaching a whopping $37 billion last year. But it's not just tech products Taiwan's shipping out. From 2018 to 2023, Taiwan's exports of tapioca and bubble tea ingredients to the U.S. also tripled, and now they're sending massive amounts of fruit, nuts, and farmed fish to America. Now let's shift our focus to ASEAN. On June 13th, Nikkei Asia reported based on data from the ASEAN Secretariat, various governments and local media that during the first quarter of this year, ASEAN's exports to the U.S. hit $67.2 billion, while exports to China were only $57 billion. This is the first time in 6 quarters that this trend has flipped. The U.S. is increasingly sourcing semiconductors and electronic components from ASEAN, reducing imports from China. Take Malaysia, for example. In the first quarter of this year, its exports to the U.S. grew by 8%, while exports to China dropped by 3.3%. According to Chinese data, from January to May, China's total trade with ASEAN was about $380 billion, making up 15.8% of China's total foreign trade. Exports to ASEAN was $234 billion, and imports from ASEAN were $154 billion, with a trade surplus of $81 billion, an increase of 28.1% year-on-year. CIMB Group economist Intan Nadia Jalil told Nikkei Asia that despite China remaining a crucial part of the electronics and electrical value chain, the rising cost and political and institutional factors, alongside trade tensions between the two superpowers, are driving U.S. companies out of China. Malaysia is one of the beneficiaries of this shift. Arina Najwa, head of political risk consultancy Bauer Group Asia, offers another perspective, noting that U.S. companies are de-risking from China, diversifying supply chains to reduce reliance on the Chinese market. Malaysia, with its strong manufacturing environment, strategic location, and skilled workforce, has emerged as an attractive alternative. Among ASEAN countries, Vietnam led the pack in the first quarter with a 24% year-on-year increase in exports to the U.S., reaching $25.7 billion. This growth far outstripped Thailand's $12.6 billion and Singapore's $12 billion. Hanoi-based economist Lê Đăng Đông highlighted the complementary relationship between the U.S. and Vietnam. He also pointed out that the spillover effect of the U.S.-China trade war, noting that the high tariffs on Chinese exports to the U.S. have decreased their market competitiveness, giving Vietnamese products an edge. In the first quarter of this year, Thailand's exports to China dropped by 5.1%, with declines in natural rubber, tapioca products, and fruit exports. In contrast, agricultural and agro-industrial products boosted Thailand's exports to the U.S. by 9.8%. Analysts believe the decrease in ASEAN exports to China is mainly due to China's risk of deflation and persistently weak demand. Since 2009, China has become ASEAN's largest trading partner, and since 2020, ASEAN has become China's largest trading partner. Currently, ASEAN-China trade accounts for about 15% of China's total foreign trade. Since 2010, China has consistently enjoyed a substantial trade surplus with ASEAN. Japan, South Korea, Germany, and Taiwan are all developed economies, while the 10 ASEAN countries vary in development levels. But they all heavily rely on the Chinese economy. Yet starting in 2023, and especially in 2024, their biggest export destination has shifted from China to the US. This marks a significant turning point in the economic competition between China and the US. The Chinese economy is wobbling, the outlook is bleak, and the international economic standing of the CCP is deteriorating. Meanwhile, the US's international economic influence is growing stronger. If the CCP insists on going head-to-head with the US, it will only accelerate the full-blown eruption of China's economic crisis. And for our final topic, China is not a safe country. Danger is lurking everywhere.